Can we see the Excel page now?
Yes, sir.
Yes.
Yeah. Now, if we look at the direct method we have adopted here, this direct method. Now, when we are not looking at it from indirect method, is only the operational aspect that is going to change. Why the investment and finance will remain the same, does not change. But nevertheless, let's take it up from there, the approach we are taking to solve the problem. Now, indirect method, the same name. Now, looking at it, what are we starting with when we are using indirect method? Let's go to that question first. Now, looking at the question, what are the things do we think are necessary we need to have idea of? Do we still remember the question? Hello? Can you all hear me?
Yes, we can hear.
Now, do we still remember that question we solved?
Trying to get it.
Yes, sir.
What was the question? What was the name of the question?
Amotekun State University of Education.
Okay. Now, let's look at that question now. Now, looking at the question, let's look at the income statement first. What can we deduce from the income statement? This is the statement of financial position. Then the next one here is the income statement. Now, when we compare the income and the expenditure, we have what we call operating surplus. Can we see the operating surplus?
Yes.
Can we see the operating surplus? 10,491,078. Can we see that in 2018?
Yes, we can.
Now, that is what we are going to recognize first, surplus. And can we also do the depreciation for the year? 909,245,294. That is the only non-cash items in the question. Do you understand? Now, all these are meant to be considered in order to move to the next level. Then we are going to consider which other aspect that is also operation under the cash flow. When we look at statement of financial position, the current asset and current liability are refers to operation, but there are items there that are meant to be classified that will not be under the operation. All these are what we are meant to factor in to be able to solve the problem one after the other. Now, let's go there. Now, here we have what we call cash flow from operating activities. The first thing to consider is what? Surplus. How much is the surplus? How much is the surplus?
10 million.
10 million.
491,078.
10 million.
So we are not seeing your Excel sheet.
Okay, you are not seeing the Excel sheet.
Yes, sir.
We can see us. You
Can
can
you
see
see
your
it?
exam. Yes, sir.
Yeah. Now, how much is the surplus we have?
Ten 491,078.
10 million 491 and what?
078. 078.
08. Okay. Now we now say add slash deduct. Non-cash items.
But I think
What
this one is the indirect method.
are non-cash
That's what I
items
was
we
about
have?
to say.
Sir,
On
this
the
method I'm
topic,
using is
What
indirect
do you say?
method, sir.
Indirect.
the heading should be changed to indirect.
This is indirect method.
Yes, just the head.
Indirect method. Now, what are the items that are meant to appear here as what? Non-cash items. Anything that has to do with depreciation for the year. It has to do with what? Profit on asset disposal, lost on asset disposal. Now, and if you look at what we have, do we have anything like depreciation as this question is concerned? What is the depreciation figure for the year?
Nine 245,294.
9 billion.
245. 245,294.
294. Okay. Since we don't have any other, we have this and this together. And we see what we have. Then we now say change in current items. What are the current items that that question is concerned? We have increase slash decrease in inventory. What is our increase in inventory? Increase in the inventory, what do we have?
2,278,192.
What do you call it?
2,278,192.
2 million. I'm with you.
278.
It's 192.
192.
192. 2. Okay. What else will also increase or decrease in what? Increase or decrease in
Account
receivables.
receivable.
How much is that?
1,738,934.
1 million. I can't hear you. 1 million.
738
738
934.
934. Okay. What else we also have again after the receivables? As
Consultant.
statement of financial position is concerned, under the current assets.
That's all for current assets, sir.
That's all about current assets, okay? Then the next one is what? Increase. Okay,
Consultants.
Liabilities.
Are we now on current liability?
Yes, sir.
Yes,
Consultants.
sir.
Okay,
No, I
consultant,
think
thank
we
you.
have account receivable.
What do you say we have?
It's only consultant,
In
short-term
payable.
loan and other.
Okay, we do not have payable, we have consultant, Abi.
Yes.
Okay, consultant. How much is the consultant figure? This one will be
3
decrease, Abi.
million.
3 million.
Yes, there's 924,042.
924.
3,924,042.
042.
2.
The next one, increase or decrease in what again?
Others.
Others.
Orders. How much is that?
2679688.
2679
688.
688. Thank you. Is that all?
Declare a loan. Oh.
That loan will be used under finance. Is that clear? The loan will be
Yes.
used under finance. That was what I was saying, that there are items that are meant to be classified. They are under what? Operation, what do you call it? Current assets. But we are not meant to use them under the operation. They are meant to, it's meant to go to what? The finance aspect. Now, this one will be in brackets because of what? Increase in what? Inventory. There's also increase in what? In receivable. That one will also be in bracket. Then this one that is decrease in what? In payable, which is consultant. That one will also be in what? In bracket. The last one also, order also reduced. We also factor in this. Then we now total everything here together. Then we come here. Now, this is referred to as what? Net cash flow from operating activities. Then after this, we have what? Cash flow. Cash flow from investing activities. Now, what are the cash flow? The activities under investment. What and what do we have? All what we have here are what we are meant to consider here. Can you see it? Cash flow from investment, all the figure we have here, all the items we have here, that's what we are going to consider there. I believe you still remember how we pick up this particular figure. The asset, the new asset they bought. You check your working note 1 is there as addition, or alternative way of doing it is to compare in the statement of financial position the net current assets of 2017 and 2018 plus the depreciation, current year depreciation that will give us this particular figure. Then this one will compare the library development fund, the 2018 and 2019. If there is an increase, it means that they have what? Have more what? Development in the area of what? Library. Then we look for the what? Addition of these. Those are the two items we have. The third item does not have any change. It remains the same. That's why we do not consider that one. Then what is the figure, please? The sum of these will give us what?
170, 578.
Yes. Thank you. This one is referred to as what? Net cash flow from investing activity. Then the next one will now be finance. Cash flow from financing activities. Then in here, all what we have under finance too, as this question is concerned, capital grant, special grant, and short-term loan repayment. Those are the things we are meant to recognize under that. It does not change. Then we have net cash flow from financing activity, which is addition of this minus this to give us this. Then we are now meant to add all these three together. That will give us what? This is cash and cash equivalent. Here. Cash and cash equivalent as at 31st 12 20 what? 2017. How was the figure?
991922.
991,922. When we now add it together with this, we have this. Does it equal to what we have?
Yes,
in
sir.
the other part.
Yes, sir. Yes, sir.
That's how it's meant to go.
Excuse me, Mr. Wasi.
Yes.
Sorry, I joined late. The first part. I don't know how you get that surplus and deficit.
I can't hear you clearly, please. Can you?
I joined a little bit late, so I don't know how you got that surplus.
Okay, I'm coming. Now, for the surplus, let's go back to the question. Can we see the question page?
Yes, sir.
Yeah. Now, in 2018, can we see income statement? That statement of financial performance for the year ended 31st December 2018. Now, under that 2018, we have the income, we have the expenditure. When we compare the total of the income with the total of expenditure together, we are having 10,491,078. That is what you are meant to pick as your surplus for the year. Is it clear? Hello?
Yes, sir. Thank you very much.
You're welcome. Any other question, please? Any other question? Okay. Absent of no question, this is I will still push forward one or two things to you on this cash flow. When you are given 1 year, how do you prepare cash flow for 1 year? Either where you are using what? Either direct or indirect method. What do you need to do? Is that clear?
Please, can you show the Excel sheet again?
I should show you the Excel sheet, Abi.
Yes, sir, please.
Okay, this is it.
Thank you.
Thank you, sir.
You're welcome. Well, absent of no question, we need to move on to the next level. But after we have discussed with parastatals, I will forward a question to the group for you to solve that question for me, where you are meant to look into the cash flow, you need to look into the statement of financial position, statement of income, the statement of financial performance. Then you are not meant to prepare cash flow statement. You can be able to do that. There is no particular question that will be given to you. You will not be able to know what you are meant to do. Any other question? Any other question?
Done for now, sir.
Okay. Now let's move on to the next one. Let's look at statement of what? Okay. Now, what are we talking about IPSAS 17? We said IPSAS 17 is another standard that gives details of property, plant, and equipment. And this also simply means non-current assets. Non-current assets. Now,
You are breaking, sir.
Hello?
Can hear you, sir.
What do you think? What is happening? Do you want me to continue? Hello, can you
Yes,
hear me?
continue,
Yes,
sir.
sir. We can hear you, sir.
Sir, we can hear you.
It's breaking for a while.
Now, what are we now talking about here that we are trying to put across to ourselves? We are talking of
how do we treat property, plants, and equipment in the public sector? And I make it clearly that as public sector is concerned, the properties can be looked into in two ways. We can look at it from the infrastructural facilities, and we can look at it from what we refer to as social amenities. Now, when we look at it from infrastructural facilities refers to as the public assets that government puts in place in order to enhance the economic activities. While when we look at it from the basic amenities, that is what government puts in place in order to be able to put in place what we call basic necessity of life for the citizen. Now, what are the terms under this IPSAS 17 that we need to have idea of? Now, we said, let me try to, you can also have, can we see the screen?
Yes, sir.
Yes, sir.
Yeah. Now, when we look at it from here, all the terminologies, we need to have idea of those terminologies. Now, all these terminologies, before now, we might have all these. They are not new to you. Now, look at it. We said this standard setup to prescribe the accounting treatment for property, plants, and equipment, so that the users of financial statements can discern information about an entity's investment in its property, plants, and equipment, and the charges in such investment. The principal issue in accounting for property, plants, and equipment are the recognition of the assets, determination of their carried amount, and depreciation charge and impairment losses to be recognized in relation to them. Now, what we are referring to here is that property, plants, and equipment now, looking at it in this end, when we look at it from property, plants, and equipment, it is simply referred to as non-current assets. And IPSAS 17 gives description on how the account is meant to be treated, what are the recognitions to be taken into consideration, what are the conditions for recognizing that asset as an asset. All these are what we are meant to look at in IPSAS 17 in relation to the depreciation you are charging for the year, in relation to the carried amount, and at the same time, impairment loss of an asset. Now, looking at it from their end, is there any question? Somebody has already commented again. Any problem? Hello?
We are good, sir. We are good.
Omolade said he's not hearing anything. You can't hear me again?
Maybe it's network from our end, but we can hear you.
Yes, sir. We can hear you, sir.
We can hear you, sir.
Okay. Now, what are the terminologies we also need to have idea of in terms of the definition of terms? First thing we look at is carried amount. What is carried amount as property, plant, and equipment is concerned under the IPSAS 17? Carried amount is referred to as the amount at which an asset is recognized after deducting the accumulated depreciation or accumulated impairment losses. That is the amount we are carrying an asset after we have deducting what? Depreciation. That is what we call carried amount. It can also be referred to as what? Net book value. B part of this says what? Asset classification. The various way in we or group of assets similar that we need to group them together into a particular class in the statement of financial position. As property, plant, as what IPSAS 17 is concerned, they recognize that asset is going to be classified into 3 classes: property, plant, and equipment. When it comes to properties, it refers to the land and building. That is property. When it comes to plant, we talk of the what? The production center and the machineries in that what hand. That one is referred to as what? Plant. Then equipment, we are talking of the motor vehicle, we are talking of the furniture, we are talking of computer, we are talking of other related what? Office equipment. Those ones are referred to what? Equipment. The next one, we talk of cost. Cost refers to the amount or the cash paid or the fair value for that particular asset at that particular point in time in order to acquire such asset. The amount you pay in acquiring for the asset. We are going to look at it in future as we are going. What make up cost of an asset? The next one is what? Depreciation. Depreciation is referred to as what? Allocation of cost for the useful life or economic useful life of an asset, or spreading of what? Cost for a particular period of an asset. We have what we call depreciable amount. What do we refer to as depreciable amount? That is the what? The part of the asset that is subject to depreciation. Part of the asset subject to what? Depreciation after deducting what? Residual value of the asset. Residual value of the asset is the part of the asset that cannot be subject to what? Depreciation. We also have what we call entity specific value. Entity specific value. What do we refer to as entity specific value? Now, this represents the present value of an asset over the cash flow on that particular what? Asset to realize from the what? Continued using of that particular asset and from its disposal at the end of the useful life of the asset. That is what we call entity specific value of the asset. We have what we call exchange transaction. This simply means, in a simple way, trading value of an asset. When an asset, the asset you received or service you received over the what? The liability you incur on that particular asset, that you are now exchanging that particular asset in the future with another asset. That is what we refer to as what? Trading value. There are accounting entries for that. We also have what we call fair value, that is the amount receivable on a particular what? Asset. That is what we refer to as what? The fair value of an asset. We also have what we call asset what? Impairment loss. That one is possible when the carried amount is higher than the recoverable what? Amount. Recoverable amount. When the carried amount of an asset is higher than the recoverable amount of an asset, that one is referred to what? Asset what? Impairment loss. Now, when we look at it from there, we've discussed the non-exchange value of an asset. We have discussed the exchange transaction, non-exchange transaction. These are transactions that are not exchange transactions. In non-exchange transaction, an entity either receives value from an asset or an entity without directing or approximately equal to the exchange what? Value. This simply means what? Disposal. When you dispose an asset off, you are not trading in an asset. That is what we refer to as non-exchange. We have properties. Property, plant, and equipment. What is the condition surrounding what? Property, plant, and equipment. Property, plant, and equipment refers to as what? Tangible assets. that one, they are being held for production use or for supplying of goods, for rent to others, administrative uses or purpose. That is what we refer to as what? Asset, non-current asset under PPE. Then this particular asset must be used for more than 1 year. That asset must be used for more than 1 year and it must be reported in the financial statement on a yearly basis. That is the conditions surrounding what? Property, plant, and equipment. It must be used more than 1 year and it must be reported on a yearly what basis. And at the same time, this must be for production, either for goods and services, or for rentage, or for what? Administrative uses. Now, recoverable amount. Recoverable amount simply means what? The amount to be realized on a particular asset by comparing the higher of the what? Fair value, higher of the fair value and the value in use. The value in use in this sense, it simply means the present value of cash flow and the the present value of cash flow and the present value of residual value of an asset. The residual value of an asset, the higher of the two, will be referred to as recoverable amount. Higher of the two, not the higher of what? The fair value. The fair value, you are also meant to less the cost of disposal on that particular what? Asset. Then at the same time, you also the cost of sales. But we are going to look at it when we get to what? Asset what? Impairment. Asset impairment is 31. Then we also need to look at it from another aspect. Residual value of an asset. What do we mean? Residual value of an asset simply means what? An asset is the residual value of an asset is the estimated amount that an entity will currently obtain from disposal of an asset after deducting the estimated cost of disposal if the asset were already in age, in the condition of expected this and that, that is taking into consideration the estimated useful life of the asset. When you consider the estimated useful life of the asset and at the end of the day you dispose the asset of, that is what they refer to as what? The residual value, and it is part of the asset that will not be subject to depreciation. Now, the condition surrounding this is that the period over which an asset is expected to be available for use by an entity, or the number of production or similar units expected to be obtained from the asset by an entity. All this refers to as what? Residual value of an asset. Any question, please? Any question?
No, sir.
Hello? Okay. Now, we now look at it from
no
the
question
what?
for you, sir.
Okay. Recognition, asset recognition. How do we recognize assets? The cost of an entity, the cost of what? Entity's property, plant, and equipment shall be recognized as an asset only if only one, it is probably that the future economic benefit or service potential associating with the item or the property will bring in the what? Inflow for the entity. That is, if property, plant, and equipment will bring in cash inflow for an entity, it is referred to as what? It's meant to be recognized as what? Non-current asset. Number two, it is either to be valued at cost or fair value when you want to measure it. How do we measure property, plant, and equipment? Property, plant, and equipment can be measured using what? One, an item of property, plant, and equipment that qualify for recognition as an asset shall be measured at cost. But on the other hand, it can also be what? Measured at fair value. In terms of what? Measurement. Where an asset is acquired through non-exchange transaction, its cost shall be measured at its fair value. That is another related information. Then, what are the information to be disclosed relating to property, plant, and equipment when preparing a financial report for publication? Now, for you to disclose, what are the information you are meant to disclose? One, you are meant to, the measurement taken, measurement basis used for determining the gross carried amount. We need to disclose that. The cost of the asset needs to be disclosed. Depreciation method needs to be disclosed. Useful life of the asset needs to be disclosed. Gross carried amount needs to be disclosed. Accumulated depreciation needs to be disclosed. Accumulated impairment loss needs to be disclosed. The annual depreciation needs to be disclosed. Other related charges relating to the property, plant, and equipment also needs to be what? Disclosed. All these are the information to be disclosed in the financial statement. Aside that, we also have what we call asset register. Asset register is the statement that give the details and description of the assets. It has the following content. We have the what? Description of the asset. We have the cost of the asset. We have the cost of the asset. We have the depreciation method. The useful life of the asset also needs to be disclosed. We also have what? Annual depreciation, depreciation rate, depreciation method, impairment. All these are meant to be what? In the asset register. We also have what we call non-current asset schedule. Non-current asset schedule is another statement needs to be prepared. Non-current asset schedule is another statement to be prepared that gives the current state of the asset. It gives the current state of the asset. How does it look like? How does it look like? We also need to have idea of how it look like, which I'm going to give the details of that. What are the accounting entries when it comes to property, plant, and equipment that we also need to keep account of? One, we need to keep account of what? Assets. We need to keep account for depreciation. We need to keep account for asset disposal. We also need to keep account for profit or loss on an asset disposal. Then we also have what we call revaluation, asset revaluation. We have what we call non-current asset what? Disposal. We are also meant to disclose all this in details. But the class closed by 5. I will be having another class in the next 10-15 minutes. But do you have any question? I will forward some things to you after this class where you will see all what I've made mention of. Asset register, non-current asset schedule, all those ones, I will forward them to you. You will see them in the material I'm sending to you. Any question?